Hey traders, Pips Hunter here with your weekly Forex forecast for March 3rd to March 7th, 2025. In this forecast, we'll start by analyzing the DXY, because once we understand where the dollar is heading, we can jump into the majors and identify potential trade setups for the week. But first, let's talk about the economic calendar. As I always say, the economic calendar is our roadmap. Why? Because for the market to move, we need volatility. And economic news is one of the biggest sources of volatility in Forex. However, not all news events are worth paying attention to. We only focus on the high-impact events, or the red folder news. Here's this week's economic calendar from Forex Factory, filtered to show only red folder news. As you can see, there are high-impact events spread throughout the week. But here's something crucial. Not all red folder news is tradable. There are three major events, what I call the Big Three, that I avoid trading the day before their release. These are NFP, FOMC, and CPI news. Why? Because the market tends to consolidate ahead of these events, preparing for the expansion that follows. I personally wait to trade until after the news is released. That said, I sometimes trade on these days, but with reduced risk and stricter confirmation criteria. If you're a beginner, my advice? Stay on the sidelines. So, for this week, our prime trading days will be Monday to Wednesday. We'll avoid Thursday since Friday brings the NFP release. Friday can still be a good trading day, but only after NFP drops. One last thing. This news breakdown is tailored for day traders and scalpers. If you're a swing or position trader, news timing is less critical. Just know that major expansions typically align with high-impact events. All right, now that we have our roadmap, let's break down the DXY and the majors to spot this week's best trade opportunities. Now let's break down the DXY, starting with the monthly time frame. Last month, price respected this fair value area perfectly and even swept the previous month's low, a clear sign that we could start looking for higher prices. But why is this fair value area significant? To understand that, you need to grasp a key concept. The market is always working to offer fair value, a fair opportunity for both buyers and sellers to participate. For example, in this move higher, buyers had their chance to enter. Then the market moved lower, giving sellers an opportunity. After that, price moved higher again for buyers. At this point, the range between this high and this low defines a fair value area, a zone where both sides have participated. However, the market didn't offer fair value above this area yet. That's why we expect price to first move lower, to invite sellers in, before expanding higher again. And that's exactly what happened. Price dipped into the fair value zone, respected it, and gave us a strong reaction. If you're not familiar with the concept of a respect candle, I created a PDF explaining it, which you can find in my free Telegram channel. I'll leave the link in the description below. Now, shifting to the weekly time frame, we can see there's no real resistance that would prevent price from moving higher smoothly. We also notice that this weekly candle swept the previous week's low, another sign of potential strength. On the daily time frame, Friday's price action broke this high, disrespecting the bearish fair value gap and forming a new bullish fair value gap. I expect this bullish fair value gap to hold and send prices higher, especially since price has already retraced into it. But here's the key. Fair value gaps don't magically hold. You need to drop to the lower time frames and observe how price reacts within the gap. Looking at the 4-hour time frame, we can see that this retracement came in with strong bearish momentum, even forming a bearish fair value gap. That tells me I need more confirmations before engaging in any bullish trade. All right, now let's move on to the majors. Let's start with EURUSD. On the monthly time frame, we saw a strong sell-off that created these bearish fair value gaps. Other than that, there's nothing significant to focus on at the moment. Moving to the weekly time frame, there's no clear direction just yet, but on the daily time frame, we have a bearish fair value gap that aligns perfectly with the DXY outlook, suggesting that price is likely to continue lower. Based on this, we can conclude that EURUSD is bearish for today. Now, let's move on to GBPUSD. On the monthly time frame, price swept this key low and left behind a bearish fair value gap. On the weekly time frame, we see that a bullish fair value gap formed, which then created another bullish FVG. This suggests that the market is leaning bullish and could be targeting this high. Now, on the daily time frame, we have a bearish fair value gap similar to EURUSD, but unlike EURUSD, GBPUSD is also sweeping a key low. Because of this, I'd say GBPUSD is indecisive at the moment, so I personally prefer shorting EURUSD over GBPUSD. Now, for the other major pairs, here's my bias. I'll let you analyze them yourself using the same approach we just went through. That's all for today. Thanks for watching. If you haven't already joined my Telegram channel, I highly recommend it. I'll leave the link in the description below. See you next time.